whether or not a credit function of a company, irrespectively of industry, irrespectively of organization, could be great. And under the greatness, I believe we need to use the definition set by Jim Collins, whether or not this function is able to deliver an outstanding results. And maybe you can say, what are these results? How they could look like? What are the tangible results of credit function? And if we can call them outstanding, how they're supposed to look like? What's your opinion on this topic?
I gave it a bit of a thought, and I question myself. The same question, basically.
Mm-hmm.
Credit function be great, but be great in what? Are we talking about making the credit function more visible within an organization? Are we saying that making it great by employing the best people that are possibly available in the job market in order to manage our cash flow,
Mm-hmm.
our receivable? Isn't it great, or are we talking about making the credit function great by means of selling more to our customers? Is it all about decreasing the day sales outstanding?
Yeah.
Saying that the credit function could be great by making the people working in the field of credit management move out of their comfort zone, of their offices, go out, meeting people,
Mm-hmm.
doing, or rather developing good customer relationship in order to increase sales? Are we saying that making the credit function great by means of building good relationship internally, especially with the sales guys, especially with the sales team? What are we saying exactly? And I think that these are all important.
Mm-hmm.
However, in my humble opinion, making the credit function great is when the people employed at the credit function are motivated enough to listen to the needs of the customers.
Yes.
To discuss these needs with the sales team, and following the trigger of the sale, coming from the sales people, obviously,
Mm-hmm.
these people working in the field of credit management will analyze the creditworthiness of that prospective customer, because credit is both costly and also carries an element of risk.
Sure.
And therefore, together with the other departments, especially with the sales team, because we do give credit in order to increase sales, that's basically it.
There is no other reason.
Because otherwise, it would be much more easier for an organization
Yes.
to sell cash on delivery.
Mm-hmm.
Obviously, we all know that without granting credit, unfortunately, we don't sell, or we don't sell as we don't reach our sales targets. And therefore, together with these sales people and with other internal departments, we analyze the creditworthiness of our prospective customer at the onset, following discussion with the customer and listening to the customer to know their needs, to exactly understand their needs, and come up with the appropriate competitive credit terms profitably and profitably is underlined and bold. And we should come up with this profitable credit terms, not alone, not without consulting the other departments, but we should arrive in granting such credit terms together with the other departments, including the sales team. That is my how I would make the credit function great in the long term.
Yeah, we're talking about, because I was wanting to highlight that original, this concept of good to great was just about outstanding results delivered over, let's say, 15 years. That's what about that. Ludo, what's your opinion?
Well, to be honest, I have heard a lot of let's say, the important elements of credit management have been mentioned by Joseph. Not surprising, since he has already a very long experience in the area. I think it's good to emphasize that credit management is not just one function or just one thing that people in credit management are doing. The important thing is that you find the right equilibrium between the different things that you have to do. On one side, you have the risk, and you have to make sure that the risk is not gone completely, but that your risk is managed, that you know what kind of risk you're incurring, and that means that you need, let's say, all the technical skills to make a good creditworthiness analysis. Mm-hmm. But as Joseph also mentioned, this analysis is not only a technical or an analytical process. You have to do this together with your customer, together also with your salespeople, because in many cases, your salespeople have a lot of information about your customers. They have information about your customers, about their competitors, about the markets they are working in, and so on. And it's very important to have this information as well, to be able to include it in your technical analysis of the creditworthiness and the potential future profitability of a customer. That's one side. Mm-hmm. Let's say the more preventive part of credit management, where it's pretty technical and very important to work together with others. But then also the next step is, of course, the relation with the customer. Credit management is customer relation, and customer relation along with and together with your sales colleagues. Don't see them as competitors. They are our colleagues. We're working for the same company. We have the same targets that we should reach. So working and always considering the importance of your credit, of your customer relations, and also the collaboration with sales is a key element in this case. So these are, I think, the two elements that we could start with when we talk about, let's say, great results obtained by credit management. Make sure that your customer relation is okay and that your risk is controlled.
Thank you. Because I didn't expect too much differences between what to say, but the credit management function, the last thing we could say about credit management function is that it is simple. It is not that simple, because we got usually superposition of, depending on how do we count, we got sales, we got general management, we got finance, we got treasury, we got accounting, and this everything is only within the company. Plus we got customers, plus we got suppliers, and all these relations are to be satisfied. And on top of that, obviously, we need to analyze credit risk, and there is cost of credit, there is credit risk, and we all remember that. I used to ask a very simple question: what is the ultimate reason for accounts receivable to exist? And for sure, this is not to create job for credit managers. No, accounts receivable exist to help company to sales and to remain competitive. And as Joseph, very rightly said, the key element of that is actually terms. We need to make sure that terms are adequate to the current situation, adequate to customer business, adequate to our business, adequate meaning we remain profitable and the level of risk is acceptable and at least known, and they are adequate to current economic situation on the market.